We are here at Bank of America's New York trading floor this morning, and joining us right now is Bank of America's CEO Brian Moynihan. Brian, I want to thank you, first of all, for hosting us here today and doing it on a day when there's a lot of market activity that's coming. I didn't realize until I got here this morning that this is actually 15 years since last night. Since you were named CEO. You took over in January of 2010, but you were named just last night 15 years ago. What a long, strange trip it's been, huh?
Well, no, it's been great. It's been an honor to lead this great company and all these talented teammates out here. And it was 15 years ago yesterday that the board met and announced it, and we announced it. And then I had my first town hall with everybody today, 15 years ago. And you know, it's been great to see this company take its position as a leader in all its businesses with great scores from those customers, great scores from the teammates, delivering for shareholders, helping what you can do to help society. It's a great company. It's an honor to lead it, and I'm very proud of what we accomplished.
Yeah, the stock price has more than tripled over the time that you've been here. And I know this year's been a good year, too, up 34%, I think, year to date, maybe 36% over the 1 year. There's been a lot of enthusiasm very recently about financial stocks in general, just given what we're seeing with a new administration that is poised to take over. Why don't we start talking a little bit about that? I heard you say in the last week or so that you thought it was very rational to see these stock prices taking off like this. You want to explain?
Well, that's part of the thesis that the banking industry's valuation relative to the other valuations you all spend all the time talking about is still lower than usual. But yeah, in the end of the day, we had a swing in regulation that probably went too far, and that there's hope that I'll come back. For the smaller banks, the ability to merge together was slowed down, and as an investment banking firm, you know, we can't buy anybody because it's not legal under the rules, hasn't been for 30 years, but as an investment banking firm, we like that activity. And then, you know, and the belief is the economy is going to grow, and that the belief in the economy growing, well, the markets are up and all the activity, and I know you've got Jimmy DeMar, my teammate, on later to talk about what's going on in the actual markets. But yeah, the activity among our customer base and stuff, the enthusiasm for potential deals for non-banking clients getting through and happening. You know, there's a lot of enthusiasm. So it'd be completely irrational if the bank stocks would follow the economy and the optimisms come out.
What did you hear? Do you tie this back to the election with the regulatory oversight that's coming, or the changes in the regulatory oversight that are coming?
Well, the President-elect Trump ran on a position that there was too much regulation and too much had to be dealt with. Obviously, inflation, immigration, regulation, and you know that obviously for people who've been in this industry for a long time like myself, we got to get the thing back to the middle, and he's been clear about that. And I think the appointments he's had so far, which is really Treasury Secretary, they haven't gotten to the bank level appointments, are clear that they're going to try to maintain stability in the operations of the Fed on the monetary side, but push hard on the regulatory side to get the balance back in the system.
Scott Bessent is the choice, the incoming president's choice for Treasury Secretary. Have you spoken with him at all?
I've spoken to him. I know him. He's terrific, and he'll be great. And he knows our industry. He knows what goes on these desks. He knows what goes on. But, you know, at the end of the day, one of his challenges is he's got a big budget deficit, and we've got to get that more our eyes and stomach aligned, right? We're running a $1.8 trillion deficit last fiscal year. Mm-hmm. That's equal to the entire GDP of Australia, to give you a sense of size. $30 trillion in debt and growing. So we've got to get that aligned, and he's going to have to be a leader in figuring out the balance of all the ideas to see how they all work.
I mean, it's a tricky task, especially when you listen to everything that incoming President Trump has had to say about things. On the regulatory, obviously, that's going to be great for growth. Big deal for a lot of businesses who are here. But there have been a lot of fears and concerns about tariffs, for example. What happens with some of those talks? What happens with trade? How do you balance it all out? I've seen what the bank has said, but what do you think?
Well, I think Candace's team has taken a position that if you really see the regulatory relief and other activities increase the profit margins of companies and the tariffs come through, they will eat more of it. So the effect of the inflationary side of the tariff will be lower because the companies will be willing to eat it because they're making more money, and they never want to change price. It's a very competitive market out there. You raise price for whatever reason, even with pass-through goods prices, you know, people seek alternatives. So I think people feel it's relatively balanced in the range of tariffs that are being talked about. At the end of the day, you know, I think this discussion went on during President Trump's first administration. It will go on again. It's already started up in advance of even the inauguration. And it's about a fairness. You know, we buy a lot of stuff from other people. We have the largest consumer economy in the world. We have the largest economy in the world, so we buy a lot of stuff from other people. Why aren't they buying our stuff? Mm-hmm. And the reality is they're trying to get balance to that. And that creates jobs and more opportunities for American companies. So it's hard to argue with that. But the question has to be balanced against the impact on inflation, the impact on slowing down the economy, and also what we realistically can do in this country. You know, there's things that are made in other countries that have been made there for many years that are so inexpensive, the American consumer, you have to think hard about whether you actually can bring in this country and create the kind of jobs that you want to create.
It sounds like, I think the bank's official policy has been that it's going to be a wash between the two sides on this. It sounds like you are a little more positive about things, though.
Well, I'm more positive than enthusiasm. America, if you think about what was coming through last summer, you saw every time our teammates put out their economic projections of consequence, and they really changed them. It was always increasing the GDP growth rate for this quarter and into the early part of next year. So, in fact, you've gone from where, if you and I were sitting here last year, we'd have said this year was probably like 1% plus this quarter. Now we're at 2% plus. Next quarter, we're at 2% plus. That was only a few months ago was 1.5%. So they keep increasing that. That was building all the time because consumer spending was solid, employment levels were solid, companies were making money, companies were investing. But as you came through the summer, then you had the kick of, well, maybe there's more ahead. And so now those economic projections have literally gone up by almost half a point. That's what's leading to more optimism rather than whether the tariffs will cause a little bit of inflation or not. If the economy is growing, everything is a lot easier.